All right, good morning. Como talvo? Jumbo, Ohio. You guys ready to go? Let's get her done. So let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. You know, it's a pretty good idea to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good morning, everybody. Welcome to the Forex.Today YouTube community. This is a channel that gets together this time of day, approximately 8 a.m. New York time, before the stock market opens, to align our satellites and synchronize our watches. What? Wait. Anyways, we support each other mentally, psychologically, emotionally, and then, of course, we do technical and fundamental analysis too. So, you are the boss. I am a humble currency trader. By the way, my name is Wayne McDonald. I've been doing this for a very, very long time, and I have some experiences that I can share, good, bad, and ugly, which I think you will be able to learn from. So, if you ask questions, I'll let you be the boss. How about that? You ask questions, and I'll do my best to answer them. We can go over specific pairs. We can go over dollar pairs, yen pairs, Swissy pairs. If you want to do crosses, if you want to do relative strength exercises, if you want to do scalping, spot trading, market open trading, position trading, carry trading, we can look at all of those. We could do exotic pairs like Mexican peso is a great one. South African rand is another one. We could look at gold. We could look at silver. We could look at Bitcoin. We could look at, I'm missing what? Gold? Did I say oil? We can look at oil. All these things are up there and even more. So if you want to cover economics, macroeconomics, microeconomics, I have degrees in those things. So maybe that's something I can do. I don't know. There's a lot that we can cover, right? I usually go 2 hours. I got to cut this back, man. I got to cut back to an hour, hour and a half, right? Yeah, Pete wants to do XRP. Sure. For sure. For sure, okay? Today, you looks more young. Thank you. I appreciate that. I got my Trader's Way colors on today. Check that out. I know. Sexy boy. Sexy boy. Right? Yeah. Got my Trader's Way colors on. So thank you, Trader's Way, for sponsoring our community. You're a broker, right? Trader's Way is a broker. What do they say? Typically, a broker's like, give me a lot of business. Okay. I've been approached by many firms over the last 20 years. I like Trader's Way because when we first met each other, like, hey, can you help us educate our traders? We want them to be more successful. We want them to have confidence. We want them to stay around a long time. We want them to trade successfully and profitably. And I'm like, that's your number one thing? They're like, yeah, we care about our clients and we want to provide them the best support, education, and service possible. I'm like, no way. Right? So one of the first things I did with tradersway.com, they sent me to the China Forex Trading Expo, and we won best client education. Just like that. So very, very cool. Like, think of the mindset, right? That's why I bring that up. Think of the mindset. Reminds me of a guy that sells very, 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 very expensive training courses. And I was a speaker at some other expo, I think in New York or something. And anyways, there was this huge group of people that followed me back to the FX Bootcamp booth. And he comes up to me right in front of them, which is just amazing. And he's like, hey, we should work together. I'm like, why? And he's like, we can make a lot of money together. I'm like, I already make a lot of money. And he stopped. And he's like, like he didn't say like we could really, have a positive impact on people's lives, right? That's not what he said. So anyway, so think of the mindset of Trader's Way where, not only do they want to execute your trades quickly, not only do they want to be competitive in their pricing, whether it's an ECN account or a spread, right? They also want to provide world-class customer service, and they want their customers to be confident and happy and successful and all that kind of stuff. You're like, look at the mindset versus someone else is like, hey, let's make a lot of money. Right? Really? So anyway, so thank you, Trader's Way. I like working with Trader's Way. I mean, honestly, they're coming up with ideas and they're pinging me like, boom, boom, boom. We got some ideas. We can have a good impact here. We can have a positive impact there. We could do this. We could go there. There's so much we can do to help. I'm like, whoa. Wow. So anyways, thank you, Trader's Way, for being good people. So there is no financial obligation for attending these webinars, but you do have an obligation. There is a cost. The cost is for you to go to tradersway.com, register for a demo account, and give them an opportunity to earn your loyalty and respect. Is that fair? Is that fair? Okay. I hope so. I think it's killer. Great. Remember, like, a broker's not just a service provider. Ultimately, they're like a business partner. If you can't, if you don't have a good execution partner and someone that's trustworthy and all that, it's a risk. So having a good execution partner like Trader's Way is very important, in my opinion. Okay. Anyways, chicken Sims lady. All right. So, good morning, by the way. XX has been with them for years. Johnny Muff says, that's fair. Cal Linlin says, that's fair. JV says, many thousands of dollars withdrawn from Trader's Way without fail. Smiley face, yeah. Manuel says, hey, Wayne, sometime back you said that you were preparing a short course for Trader's Way clients. How far is with it? Well, I've started. I've built the site, so I have meetings coming up with them pretty soon. In fact, to figure out what kind of content should go in there. Okay, yeah. So yeah, I'm probably going to talk with them today about that. So I've made some good progress. All right. Hey, ladies, what's colder than cold? Ice cold. All right, what would you like me to cover today? What would you like me to cover today? What currency pair or commodity is the number one concern for you today? What's the biggie, the doozy? What is the raison d'etre? Kitty Cat Yen, USD Turkish Lira, USD Mexican Peso, Great British Pound versus USD. Wait, XX, you can't double dip. You already put your vote. What else you guys want me to cover? USD CAD. Okay. So we have one for USD CAD, one for CAD Yen. Similar, only different. Anything else? That's it. All right. This is going to be a short webinar. Jeff says Swissy Yen. Come on, Jeff. Jeff, you're setting me up. Come on. Come on, Jeff. We've had this battle before, eh, Jeffrey? I'm like, it's the thing is they're both funding currencies, Jeff. So I would never consider it. I mean, we could look at it, but I wouldn't trade that. It doesn't make any fundamental sense to me. Pete says Aussie dollar versus US dollar. Pete, I thought you were going for XRP. Wait, you guys are double dipping. Hey, Joey. Joe, I'm the boss is in the house. Pete's going again. Kiwi dollar. Okay. What else? USD, yen, AU, Euro, ZAR. Okay. Doing some macro. Fine. Oh, by the way, speaking about macroeconomics, today is Thursday, so my group gets together, my Thursday group. So if you have signed up at fxbootcamp.com and you're taking all the courses, you're also invited to join the live trading group as well, which we meet on Thursdays. So I want to do technical analysis today with the group, and we'll probably do some small group work. We haven't done that maybe in a month and a half. So we're going to do small group work on technical analysis, in particular to identify whether the yen strength is closer to being done and yen weakness is on its way maybe. So I think that's what we'll do today. XS says, how about covering USD in general? I do that all day, every day. So yeah, cool. All right, that gives me a good feel. Right, gives me a good feel. Look at Asian currencies here. Aussie way down. Right, Asia Pacific down. Kiwi way down. Holy smokes. Crazy. Euro down. CAD down. So looking at all of this, I would assume dollar up. Oh, look, dollar up. What? Oh, and yen up. So how could we describe market conditions? In 2 words. Yeah, yep, Johnny's got it. Mina Kishi says, yep, risk off. Pete, risk off. Jimmy, risk off. On, risk off. Mahir, risk off. Peter, risk off. XX, risk off. Kishore, everyone's got it. Everyone's got it. Thank you for actually responding, by the way. I appreciate that. And let me ask you this. How is the sound today? Okay. Is the sound, we got it? Like, is it excellent? Is it perfecto? Is it fine? Is it perfect? Is it good? Is it perfect? Good. Finally got all the settings set up. You have to have special software and all that. But right? If you can't hear me, you can't learn from me. Yeah. Weekly jobless claims. Yep. Great. All right, so risk off. So more selling of the yens. Asia Pacific looks like good matches. Okay. Now, we're held up, however, at exactly the price you would want it to hold up. So the interesting thing is, technically, and here's the problem with relative strength. Remember I said the problem with relative strength is you're looking at what has been strong or weak over the last maybe 24 hours, maybe over the last 36 hours. But it doesn't tell you what it's going to be 12 to 24 to 36 hours in the future, does it? And I found that early in my career, having set things up day after day after day, just looking at overnight volatility statistics and creating an index, and then, spending this 90 minutes doing research before I even looked at a chart. And then I found out there were times when, let's say 2, 3, 4 days in a row, I crushed it. I made awesome trades. And then something would change. Apparently, price got to pivotal points. You get it? But at the point, at that time, I didn't know. But you could have 3, 4, 5 days in a row, and then all of a sudden, the entire market would reverse without warning. So I said, well, I got to figure this out because it seems to me that past performance does not predict future results. So therefore, I need not just a lagging indicator. In this case, it was my analysis, my lagging analysis of overnight volatility. I used that for the basis of matching strong versus weak. So I said, well, obviously I need to know why trades reverse at certain prices. Because if we're talking about CAD yen, we're talking about tens of billions of dollars needed to reverse it. So other people must know that it's a good price to reverse. And how come I don't know? And so those are the questions, right? Those are the questions I had for myself 20 years ago. What was it about that price that everything changed? And how come I don't know about it? Okay? Can I predict it in the future? So that's what it comes down to, because what happened overnight is relevant to what might happen today, but it does not predict the future. So I need to overlap. So the lagging part is there is a trend in play. So you got your triple top, lower low, lower high, lower low, lower high, lower low, lower high. Okay? And a lagging indicator would say, well, that's going to last forever. Okay? Notice if you're, familiar with swing trading and price action, in particular price action, okay, these are role reversals. Okay? Very, very standard operating procedure. And so what I'm actually looking for now as far as trying to predict the future is this. This will have meaning for me. I'm not predicting it. I'm not telling you it's going to happen. But if it did occur, it will be important, technically speaking. Okay? So one thing you could get good at, or one thing that I tried to do early on, is to say, in my observations, I need to look at when these reversals do take place. So it's after the fact. I find them. I would actually spend time looking for these scenarios. And then I would go back, and then once I found the reversal scenario, I would ask myself, why? What did it? Okay? And I would start to notice things like M1. Okay, remember, nobody taught me M1 except the market. The market taught me M1. In fact, many courses I'm sure you could take on pivot points, and they still don't teach it right. Because what happens is one guru does a course, someone takes it, and now they're like, hey, I'm a guru too. And then someone takes their course, and this person becomes, look, I'm a guru too, and we're all gurus, and you should all buy our courses, and none of them trade it properly because they don't understand. So no one actually taught me except the market. I learned through observation. Because you got to remember, when I first started trading Forex, there were no gurus. There were no books. There were no textbooks at universities. There were no courses. No YouTube. YouTube wasn't invented yet. There was no Amazon.com. It hadn't been invented yet. Okay? There were no webinars. So it was just me and the market. Charts were not included with brokers. So even back then, most traders didn't even use charts. So there were no, like, hey, you should take my BS course on pivot points, because there were no courses. So I had to learn the hard way. Okay? Anyways, so now one of my observations that I want to look at is this price here might be important. Okay, 78.50. And this price here might be important, 78.34. So I'm going to treat this as a zone. Okay? And once again, I'm not predicting. It's an if-then statement. If we get something like this, that's a possible trade. That's a possible trade. Okay? And ultimately, the real test is we got to get through the role reversal. And if we do, it's a confirmed reversal. Okay? Notice that this is actually next week's trade. Right on, boss. Hey, can you post the link? Yeah. You're not allowed. Wow. Cool. So now you would sit and you would wait. Okay. Is that right? Huh. I didn't make that rule. What kind of EA? The only EA I really use is the auto stop. Okay. But I don't use any EAs to try to make decisions for me. Okay. So I want to also put this into perspective, guys. If this holds, it's going to be a double bottom. It's this week's bearish exit. Okay? It's also this month's bearish exit. So what would you anticipate could happen at these prices? Do you think bears might exit? What do you think? But I want you to understand why it might happen. Is this helpful, guys? If you knew we were at a price in which the monthly bears should exit, would it be helpful to know that in advance? That's 78.49, I think. 78.49. We knew that on the first day of the month. Then this week's bearish exit is 78.34. And we knew that on Sunday. So combining that, would that be helpful? Now the next part is let's predict the future again. So this is something you would have known on Sunday. Okay. Sunday opened here, so it's an OOP. Also, the first day of the month is here, so you knew that on the first of the month. So you knew this on the first. You knew this on Sunday. Okay. So now let's take the exercise to the next level. Okay. Next month's bullish buy. Bullish entry, we'll put. Now that number is 78.49. Huh. Look. But I'm looking at two different things. This is the September exit for bear, 78.49, and the October entry for bulls, 78.49. They're actually about a half a pip difference. Okay? And next week's bullish entry is also 78.49. Okay. So, putting all of this into perspective, we get to our if-then statement. And remember, I'm trying to get you to understand. I'm not predicting it's going up. I don't predict anything. I want you to understand what is happening and the consequence of those other traders' actions. If bears exit, what happens? Okay, please type in your response. How will you know bears exit? Then you will answer that one. If bears exit and you recognize it, then what will you do? Well, that's not very specific, JV. Boom, ba bum. What the hell you waiting for? Right? Yeah. But do you understand? I'm teaching you how to plan your trades in advance. If bears don't exit, how will you recognize that? Okay? This is how you trade. Okay? Now, how, like I'm trying to, if you've read my book, the way the book reads is that you would see a 5A cross up, a 5A cross down, and a 5A cross up. Hua? Roger that. That's affirmative. Cool, right? Because the way I look at these things is I treat them as dynamic levels of support and resistance. So that is resistance. That is resistance. This is resistance. And as we're breaching that, we would be trending in a new direction. Hua? And that would be relevant, technically speaking. Fundamentally, you already got your reasons. Technically, now you're like, ooh, a change in market conditions that are favorable to my bias. And now you know to fire for effect. You got to know when to retreat and regroup. You need to know when to attack. You need to know when to counterattack. Okay. Okay. And these lower lows were very important, huh? So once we start making higher highs, I would also argue the higher highs are very important. Okay? And remember, this might have been a painful move for you the last 3 or 4 weeks. George Soros never even thought about it. Holy smokes, I made $13,000. Good for you, brah. Scammer. Yeah, scammer. Cool. Remember, you're smart money now, guys. So anytime you run into stuff like that, remember the sales pitch is for poor people. And you think bigger than that. If someone says, I can make you money quick, we can make some easy bucks, we can get rich quick, that never works with someone that has money. First of all, they already have money. But second of all, the way you make a lot of money is you earn it. You provide value to somebody else. Every dollar in your pocket is somebody else, right? Every business, right? When you spend something, it's somebody else's income. So when you get paid, so if you have a job, right? If you have a job, you're providing value to your boss and they pay you money. And where did they get that money? From their customers. And where did their customers get it? By providing value to somebody else. In Forex, you made money because you took it from someone else. So the profits in your account is someone else's money. And you had to work hard for that. You had to be smart. You had to be intelligent. You had to be patient. You had to be disciplined. And now, because of that value you have, that skill that you have money. So when someone comes to you and says, I can help you get rich quick. I can help you make easy money. You're like, that doesn't exist. That's not how the world works. Right? But the sad thing is they don't even understand their pitch doesn't even make sense, right? So anyways, don't think that way. The secret sauce to wealth accumulation is, how can I provide society value? How can I make a difference to my neighbor, to the business down the street, to my own business? But now if you own your own business, you have to provide value to your customers and your clients and your community. Like, if you want to be worth a lot, you have to have self-worth, right? You have to provide value if you want to be valuable. And that's not a quick, easy process. So never fall for anything like that. It's ridiculous. The part that bothers me is they're preying on people who are vulnerable and desperate. And that's pathetic. Okay? So, anyways, we got rid of that dude. Anyways, if you invest with his guy who apparently likes spamming people, they can make you $13,000 in a couple of days. Oh, yeah, great. Yeah, this is a tough world, right, Pure? This is a tough world. All right, so anyway, so now we have to have patience and discipline. That's our value, by the way. Think about it. If you whittle everything down to trading one bias only. So you flipped a coin and you're like, you can only buy CAD yen or you can only sell CAD yen. Let's say you flipped a coin. And this determines the next 3 years of trading CAD yen. Okay? What if you did that? Now you'd have to have patience and discipline. But if you flipped a coin and said you can only buy CAD yen when the market now is bullish. So now the first thing you have to do every day is say, is the market bullish? And then the next part of this is buy dips when the market is bullish. So now every day you could say, is the market bullish? No. Next. What about the next day? Is the market bullish now? No. Next. Right, next day. Is the market bullish now? Next day. And you just wait and you wait and you wait. Is the market bullish now? No. So you wait. And if it doesn't work, it goes like this. Cool. And then next week you're like, is it bullish now? Yeah. Okay. So now, after it has technically become bullish, now you move to stage 2. You buy dips. And as you see, very often trends last for 1 week, 2 weeks, 3 weeks, right? These are often there's 3 weeks up, 2 weeks down, 3 weeks up, 2 weeks down, right? That kind of stuff. So you have to work 3 out of 5 weeks. That's okay, isn't it? Remember, if you still have a job, I want you to have a job in the beginning, guys. Right? So if you have a job, you have to have a scenario where you can trade this, right? And be in it for a while, one way or the other, but you can't be chasing. And then the next thing is then you have to put together your Forex business, and then you got to get rid of your job by exchanging your job that makes your boss money to making your clients money. Who do you care more about? Making your boss money or making your clients money? Which one would you rather worry about all day, every day? Do you want to get in your car and drive 40 minutes to your job to make your boss rich and then drive 40 minutes home? Plus, remember, you have to go eat lunch and waste $20 on lunch and drive back, and then you do this and you do this. And so your 8 hour a day, if you only work 8 hours a day, probably cost you 10 hours of your time. Okay, whatever. Or would you rather just stay at home and run your Forex business instead of going to a job, and you're focused all day, every day, not on commuting and making your boss rich, but keeping your clients happy? That's the next step, right? So you can get rid of your stupid job making your boss rich and instead keeping your clients happy. And now you're doing what you love to do. You're being a Forex trader. Okay? That's really what you need to do. That's your plan for the next 5 years, by the way. Let me ask you something, and I'll move back on to technical analysis. I know you're thinking, oh my God, here he goes, 2-hour speech on something, right? So I'll go back to technicals. But how many people appreciated the discussion I led, I think it was last week, about the difference between if you made $200,000 a year at your job versus $200,000 a year as a Forex trader? How many people found that like meaningful? Like not just a little bit meaningful or interesting, but you're like, maybe there was a click, like a breakthrough, where I showed the Forex trader will retire with millions of dollars. And the job person retires with hundreds of thousands. And the reason for that, and my tax attorney told me this 20 years ago, he said there's two taxation systems in the United States. One for poor people and one for businesses. Right? You remember that? And it had to do with, I can pay myself. My company is a wonderful company. It pays my retirement. I can take $60,000 out of my money, profits earned, right? I can take $60,000 of my profits. It's actually $57,000 in the United States of America. And that changes, by the way. It used to be more, it used to be less. But anyways, it changes. But imagine now you take $57,000 and it's free money. Before the tax man shows up, you take that money and you put it in your retirement account. Now compounded tax free. And you do that year after year after year. So if you do that for 20 years, how much money do you have? If it didn't go up at all. If the government just said, you can put it in a bank account, you're not allowed to earn interest, but we will allow you to move $57,000 a year into a side account and we won't tax you on it. Not until you use it. So if you did that for 20 years, how much money is that? Pretty close to 1.2 million. That you would have paid in taxes anyways. It's money you would have paid in taxes anyways. Now, compound that 8% a year for 20 years. 8% a year for the 20 years for the first 57, 8% a year for 19 years, for the second payment, for the third, fourth. So now it's millions and millions and millions of dollars, millions and millions and millions of dollars that you would have paid in taxes anyways, just because you're a business and not a consumer. And now if you spend your money that way as well, you never buy stuff. You're not a consumer. Right? You're an investor. You're a business. And now you compound that. Everything you touch turns to money. Therefore, all the stuff you consume is paid by somebody else. Right? Your customers that are transferring wealth to you. Okay? Cool. So anyways, provide value and you'll be fine. All right, so now we're here. I don't remember why this is here because that's an S pivot. Oh, I see. This is the profit taking here, and it's just getting destroyed. Destroyed. Okay, big moves today. Okay, so what would you do down in here? Is what you'd be asking yourself. Okay? More trade wars, more uncertainty in Japan. Oh, one of the things leading to this, where's my 1.6 trillion? Where's my 1.6 trillion? It ain't happening, is it? Yeah. No, we're supposed to get this from the fiscal stimulus, and we didn't get it. And remember, that was priced in. It ain't going to happen, is it, Mahir? Yeah. So we'll have to take a look at this. Okay. I'm going to take like a 2-minute break and grab some coffee and all that kind of stuff. Let me know what you're interested in having me cover next, and I will be happy to do so. Be right back. Probably 2 to 3 minutes. Cheers. And we're back. All right. So one question about the course I might put together with Traders Way. I'll have a meeting with them today or tomorrow, I'm sure. And one of the things I'm sure we'll talk about is the potential putting that course together. What topics would you want me to cover in that course? What would be most helpful? I'm wondering if it's scalping and spot trading. I wonder if it's just technical analysis or maybe some basic fundamentals. Is it how to grow a small trading account into a medium-sized trading account? That kind of stuff. $32 million. Thank you, Brian. So imagine, Brian, just that. You make $200,000 a year as a JOB. You don't get that, do you? Risk management, fundamental and day trading. So a lot of the stuff's already done, guys. fxbootcamp.com. All of that's done. Right. Kishore's like relatively faster growth cash flow strategies. Well, that would be for a small account, right? Because ultimately, with a small account, if you're trying to grow your account quickly, the only way you could do it is have more leverage. That's really the truth, right? So anyways, guys, the compounding interest, as you'll see, will make you way more money. Right? Sebastian's how small is small? Yeah, I know people, a few million would be small, right? And then other people, they only get $8. But anyways, so that's all relative. There's no answer to that, right? Right? Like I said, I know someone that lost $20 million in their trading account, and I pestered him about it. Like, those are like the worst 3 weeks I've ever seen. And he's like, why? It's only $20 million. And I remember thinking, well, $20 million's a lot of money to me, but it wasn't for him. Okay, so, okay. So yeah. So, anyways, yeah, true. That's a great one. That story. But you'll see, guys, the time, right? There's a time value to money. And I'm not going to go into the time value of money equations, but this idea that if you were making $200,000 a year and saving and investing tax-free, you will find that you will make more money doing that than even your Forex trading. So now you'll shift your mindset. And now you're becoming wealthy. Because remember, right, if you don't have much, you're more likely to gamble. If you have too much to lose, right, your trading, your behavior is different from if you don't have much, so what's the words? If you have too much to lose, you change your behavior one way. If you don't have too much to lose, whatever the opposite of that is, you're willing to risk it all because it's already not enough. Okay? So if you change your focus now, instead of getting filthy stinking rich with your Forex account, if you just knew if you could make enough money so that you could put that $57,000, assuming, again, you're in the United States. I'm sure your country has something very similar. But you're a business now. You own a Forex trading business. You're not a Forex trading individual. You're a Forex trading business, right? So if now your focus is just stuffing away the $57,000, paying the rest of your taxes, and then having enough to live humbly, then you know at the end of time, whatever that is, whether you have 12 years left, 18 years left, 25 years left, at the end, You have this reasonable expectation of a certain pile of money, and you know it's more than enough. Okay? And your trading, your behavior changes in a positive way because now you're not focused on growing your Forex account to millions. You don't need millions. You need to be able to earn enough that you can put in the maximum contribution, pay the rest of your taxes, and live a happy, normal life. And when you're too old to work, you can live your dream. You can travel the world, do whatever you want to do, smile for days and days and years and years and years, take care of your loved ones when they get old and sick, and when you can't take care of yourself, you live in a good facility, and then when you die, your children and your grandchildren are taken care of forever, for eternity. And you're like, not because of your Forex trading, but because of your Forex trading business. So if you had that vision, it would change your behavior. Because now you're not trying to make millions through your Forex trading. You're focused on the time value of money. The compound interest, as Einstein said, is the most powerful force in the universe. Okay? You see what I mean? So that's where you need to get to. Okay? Anyways. So, Aussie no good, Kiwi no good, pounds interesting. Okay? So, now you got your crosses. So, how about pissy? Look how crazy this chart is. It's like a nutcase chart. Crazy. Crazy. Looks like we got to like S4 or something. Okay. So, what do you want to do with this? Do you want to just trade it on the short run? There's the opportunity. There's the threat. Okay. That's that. And you're like, Wayne, I don't get it. Oh, well, here's your trade plan for tomorrow. You ready? So what did I do first? Relative strength. Okay, and that gets me the cross. The cross, strong versus weak. So now I set this up. These are my bullish buy zones. I have a short run trend, and it's not likely to come down for the next couple of hours. Oh, but it will. And if it does, then. So you should be able to plan this now. Okay? And you will not be surprised because you're thinking probably 8 hours in advance. Is it going to happen now? Is it going to? Probably not. Is it going to happen at the London close? Maybe. That's 4 hours. Is it going to happen at the New York close? Maybe. How about Asia Open? Okay. My guess is somewhere between New York close and London Open. Could be Asia, could be before Asia, could be at London Open. Don't really know, but I already have tomorrow planned. Now, will that happen? Is that a prediction? No, it's not a prediction. So if it's not a prediction, what is it? It's an if-then statement. I'm not predicting that it will happen. I don't know what's going to happen in the future. I just know what my behavior will be. Oh, it's not an opinion either. I don't know. I'm telling you what I will do. If it comes down, I will buy it. No, we're past bias. We're in the tactics now. Doing something is tactical. Okay? Thinking about something is strategic. So my strategy, if it comes down, I'm going to buy it. But if it comes down and the act of buying it at this price, that's tactics. Okay? Now, here's the thing. You might have had this plan already today, and we were already at resistance, and you may have already done tomorrow's trade. You may have already missed it. But it doesn't matter because it's still an if-then statement. But you might have had this planned out already, and you may have already taken it. So what might happen is it goes all the way up there, and it's already happened. So so it doesn't pull back. In that case, if you had the plan earlier today and you already took it, you got your if-then statement and you fulfilled your destiny. You drop your stop, and take a walk. However, if you didn't trade it, then you're still waiting because you missed the first one. So now you're still sitting around. Well, if it does this, then you'll do that. So you sit around and wait. Or you just drop your order and move on.com. Right? So for example, someone asked about EAs. I don't use EAs to think for me. I use EAs as a tool. So you turn your auto trading on, you grab your auto stop, and you're like, yeah, I'm going to, for a day trade, let's do a 50 pip stop. Let's do a 150 open order. Or maybe that's too much for you, and you're like, Wayne, I can't do that. Okay, how about a 33.99? Okay, so now I got a 33 OCO. I got a smiley face, which means if a order is entered, then it will trigger the 33 pip stop and the 99 pip limit. So now you could just do something like this. Done. Now, see, that's not an order in the market. That's a working order. If price comes down and touches 117.87, it will buy. The working order will be canceled. A market order is entered. And then once the market order is entered, the auto stop will put a stop loss 33 pips below it and put a target, a take profit order, a limit order above 99 pips. And if one of those gets triggered and a trade is exited, then the other one that's not been triggered will be canceled. So if it comes down and I lose 33 pips, the limit order is removed. If the limit order is hit, then the stop order is removed. So now I can trade while I'm sleeping. And I know the worst case scenario is I wake up and I've lost 33 pips. Okay? 33 pips would be here. Okay? Is that enough? No. So, you take a look at this now, and what is enough? Looks like I need more like 66. Okay. Okay. There, so let's say 70. Well, actually, I didn't mean to do that way because that's the entry order, right? All right, so I actually need to change this now. And what you would do is change your OCO to, 5150 like I had originally, right? Or 7210. Okay. How much is that EA? I think it comes with the $5 package at MetaTraders. Not sure which package it's in. Okay. So again, you could do this, right? You grab it, you drag it on. Oops. And you reset it, and you're like, well, I need it, right? Something like that, right? Well, you could do like 6180. Whatever. Okay. And so if I get entered, it automatically takes care of me. Now, to be honest, when I use this, I don't like the 3-to-1. So often what I'll do is instead of a 5150, I know that's what I teach, but the actual execution of it is I don't want to get out of a good trade. So what I'll do is I'll do a 1000. I'll do a 55999 OCO. And then when I wake up in the morning, I'll make my adjustments. Because the issue is you don't want to get out of a winner. So if it made you 100 pips, why not 200 pips? And if 200 pips, why not 400 pips? So I'd rather adjust and say, okay, I'm going for the monthly target, the monthly pivot. I'm going for this, that, or the other thing. Or if I can get seasonality, I'm not in it for a price. I'm in it for a time. You understand? So I'll want to enter my trades with the OCO, but I don't actually want to get out. Okay. What size do you want to trade, Alejandro? Alejandro, here's how to answer this. How many trades do you make a day? 10? 20? See, one problem is many of you guys only trade twice a day. So your risk is very, very high. You have to be right all the time. Versus betting on putting a lot of trades down, little tiny trades, each trade having almost zero risk as far as the account size. And when you're right, you compound it, and when you're wrong, it's no big deal. So often you guys are over leveraged because you only make 1 or 2 trades a day. You only make 20 trades a month. And the sad thing is you're like, I work 9 hours a day trading Forex. And how many trades do you do? 1. Really? Right? So that's one way of thinking about it. But here's how you'll have to handle this. What if you had 20 losing days in a row? You only trade once a day. Okay? You had the worst month, Alex. Every day you traded and you lost money. how many pips is that per day? Okay. What does that translate to dollars? How much money did those lose? And that translates into what percentage do you want this to be recorded in your trading history? Okay. And that might only be like 5%. Most likely, based on how you're trading, Alex, and this is not just you, Alex, it's going to be a lot of people, you're going to find out that 20 losses in a row might be significantly more than that. Okay? So, Alex, so in that case, 10% is fine because you never want to get there. You never want to have 20 losses in a row. So you should then, in your business plan, you should have a rule for engagement that says after, a week of bad trades, what do you do? How do you handle this? How do you get back on the profit train so that you don't compound this, right? Jeff, when you're trading with macro and with seasonality, so we knew seasonality was not likely to work this year because of the political election, but let's say, the other 3 years, very often you could have 20, 30, 40, 50, 60, 70, 80, 100 trades open. Okay? But you have to have the fundamentals behind you and you have to have seasonality behind you. And we knew this wasn't going to be a good year. It was hopeful, but remember, since about June 10th or June 12th, the thing that I've been preaching is plan big but expect small. And you never know because things might work out. Things could always work out, right? If we got the fiscal stimulus that I had projected months ago, the markets would be in a different situation now. And by the way, October doesn't have to be like September. Okay? So we don't know what the market will do in September, but if you are a bull, you would set up bullish trade plans. You would try to enter them properly, and you're thinking big, but you're not expecting. You're still staying with your right. But in decent market conditions, yes, you would add and add and add. So, for example, if you had a true trend behind you, and you were doing this now, okay, you're making 5 trades a day instead of 1. Okay, and let's say it was 3 steps forward, 2 steps back. Then once a day, you have a trade that stays alive. So after 20 days, you would have 20 open trades. Even though you got 2/3 of break even, or no, 2/3 of break even, 3 winners, 2 losses, or whatever. What you want to do is let the winners run. I can't tell you how important it is for letting winners run. You have to get this. It's a universal truth. You have to get there. And this year may not be as wonderful as you had hoped. Maybe it'll end well. But over the course of many years and decades, you will look back and say it's all about letting the winners run. And if you never get to that point, if you're always shooting at rabbits, you will never get where you want to go. Trust me, please. There's a reason why keeping your losses small and letting your winners run are both universal truths of trading. We have learned this over hundreds of years of doing this. Okay? It's not winning percentage. Because to get a high winning percentage, you'll want to keep your winners small, and you'll because you're so focused on a high percentage, you won't have the guts to take losses. So you'll ride out your losses. And it's horrible. It's horrible. It doesn't work. So in my book, I say, take pride in your losses. Like, hey, if you made 5 trades today and 3 of them broke even, or 2 of them broke even, 1 lost, which took away the profit from one of the winners. So now you got 2 break evens, 2 that offset each other. So you made 30 pips on one and lost 30 pips on the other. And you got the 5th one open, and you're going to be on it for days, if not weeks, maybe months. That's the secret sauce. You might say, well, dude, 2 break even, 1 winner, 1 loser, and after a whole day's worth of work, all you have to show for it is 100 pips profit? Yeah, except I'm not interested in 100 pips. I'm going for 500 pips. You see? Right? So anyways, you got to get to that point, guys. You have to let your winners run. And to increase your likelihood of winning, I think what you should do is have smaller lot sizes and trade more often. Instead of having, like, let's say one lot on a trade per day, have 2 mini lots or 1 mini lot and do 10 trades a day. You see what I mean? If you can get 20% of your trades to run and 80% either offset or break even, you will be very, very successful. Versus 80% of winners, but they're all small, and your losers are painful. It's not the math doesn't work. It just doesn't work. I want you to really buy into that idea. Your strategy should make sense mathematically first and foremost. Okay? Don't believe the hype. How's an equal? Can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunk. Yeah, sorry. Whoa. All right. So anyways, we're sitting on $40 still. Waiting to breach the 40. Yeah, all week we've been waiting. Alejandro says, what monthly drawdown is unacceptable? You will have a very difficult time recovering from a 10% monthly loss. Nobody with money is going to say, yeah, I'll ride out a 10% loss of my net worth. They're like, F you, bro. I got too much to lose. That might be cool for you if you got a small account. This is a rich person talking to a poor person, right? They're like, you might be cool with a 10% drawdown because you don't have much money and you need to make money. You need it. So you're willing to risk it all. You're like, I already got a ton. I got enough. This is my legacy. This is for my retirement. This is for my children and my grandchildren. 10% drawdown, unacceptable. You're freaking fired. Okay? And any more than that, you'll get buried in the sand dunes between Abu Dhabi and Dubai. One-way trip, my friend. Okay? So if you're trying to develop, look, if you're only trading your own money, and you never expect to ever trade other people's money, then do whatever you want. It's your money. Okay? But if you do want to get bigger and better and get to those next stages, you have to understand the history you're trying to build. Okay? Yeah, Javier, beautiful stuff, right? Oh my God. I went snowboarding down the sand dunes between Abu Dhabi and Dubai. I made it back. Amazing. What a great experience. With a good friend, long-term FX boot camper. We had a great time. Right? But I want you to think about the track record that you're trying to produce and produce that track record. Okay? If you attended Off the Charts with Wayne McDonald on Sunday afternoon, we covered a hedge fund. Just their management fee for two people is $70 million a year. They probably only make 3 trades a year. And their returns are averaging 3% annually. You don't have to be that good, but you have to appeal to people with money and eventually institutions with money. You have to appeal to that. And none of them, imagine they make that kind of money and they're only earning 3% a year. It's because people are not trying to get rich quick. They have billions and billions and billions under management. And their clients are just like, produce an income, don't lose any money. They're not saying, here's $1 billion, get me rich quick. They're like, produce a steady income with as little volatility as possible. Eventually, that's where you want to go. Okay? That's where you want to go. And so why don't you start with very, very, very tiny lot sizes and make lots and lots of trades? Because the loss now, a 20 pip loss, 30 pip loss, 50 pip loss, is nothing to compare to what you're doing now. You're like 50 pips, oh, too bad that didn't work out. But now you're getting yourself into good trades and you're giving them room to breathe because you're not worried about a loss. The losses are tiny. So you're like, okay, well, I'll put a 50 on here right for the stop. 51.50, right? I got to have at least a 3-to-1 ratio. And now you're letting these run and you're hitting the 150s more often than you've ever thought before. And you're like, oh my God, I'm actually a pretty good trader. I just never knew because I never let my winners run. And all my stops were too close because my lot size is too big. And you're like, oh my God, no wonder I needed to be 80% because I can't afford a loss. So you're like, let's reinvent all of this. What if I didn't care about the losses? What if I only got out of a trade because the trade failed, not because I got unlucky, not because of a Trump tweet, not because unexpected news, just volatility came out of nowhere and I got unlucky and knocked me out? What if every single trade you made was open as long as your strategy and tactics were valid? What if you never got out because you were unlucky? What if the only reason you got out of a trade because you were wrong? You know you would do better. And if you're right, you have value. That trade was valuable. You were valuable. You took all the luck out of the trade, and it's all strategy and tactics, and you know you will get it right. So drop the lot size, but trade more, because then you don't have all your bets on one horse. Now, your one horse might be fundamentals, and you might say, okay, at the end of the year, I think all the ends will be weakened, especially after the election. Okay? Let's say whatever. Let's say your bias now, your strategy is you do want to sell the Japanese yen. You open up your charts and you're like, yeah, I want to do it, but not today. But when it does arrive, then you take all these little shots. Go, 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 go. Boom, 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 boom. Right? Again, instead of one trade of the day with your full lot, you do 10 trades in one day with mini lots. It's the same amount of risk. Or maybe you do 5 trades with one mini, but now your stop is double. So now you're doing 5 trades a day. The risk is the same, but your stops are double what you're normally doing, which means the only way you can lose is you totally got it wrong. You bought it at support and it went through support. You were technically wrong, not unlucky. But now you got these 5 trades that are most likely going to turn into winners. But now the wins per each individual trade, money-wise, is not a lot because it's only 1/5 of what it used to be, right? It's only 20% of what you're used to because you were putting so much on one trade. So each individual trade, you're like, it's not a big deal yet. I think I'll go for 300 pips because it's not a big deal. You're not sweating bullets. You're like, oh my God, I made $1,000 in the last 18 minutes. Give me my money. Give me my money. You're thinking so small in a scenario like that. Okay? Get yourself out of the poverty mind. And instead, let them run. Just let them run. And the next day, because we're mark to market, remember this is an unbelievable benefit of being in Forex. Because you're mark to market, you can already trade those profits. So after a day, you got 5 trades open. They're up 50 pips each on average. So on the next day, you're like, I got myself in an uptrend. So if it comes down today around my buy zone, I'll buy it. 3 of them hit your buy zone. You're like, boom, boom, boom. They're small trades, so not a big deal. Plus, you're already trading the profits from yesterday's trades. So now you got 3 more. And of the 3, 2 are successful, and the other one breaks even. And now you got 7 trades open. You're like, it's Tuesday. By Thursday, you're going to consider taking profit, right? That's where you need to get, guys. I've been teaching that for 20 years. You gotta buy into that. Let the math work. Lower your risk, right? Risk per trade, risk money-wise. Start looking at, long-term trends. Not what's the trade of the day and that's all you do. I want you to think big. I want you to look at your losses, and losses are unacceptable, right? So but losses are also unpreventable. So now every loss that you take must be financially meaningless. Okay? If you were trading mini lots with $100,000 account and you lost $50 today, percentage-wise, it's nothing. Okay? Now, if you were in a stock portfolio of $100,000 and you had a good year in the stock market, at the end of the year, you'd have like $115,000 at the end of 12 months, which is less than 1% a month compounded. And yet you're trying to get 10 or 20% right now. So imagine if you're actually imagine 10 years from now, you're going to market yourself as a professional money manager. You can trade Forex and then have some futures and options and all that mixed together, right? Fixed income, currency, commodities, whatever you want to do. But here's the interesting thing. Okay? Here's the interesting thing. You understand that you're only competing against the mutual fund investment. So now if you could do 25% a year, not 200% a year, right? So now if you're only doing 2 or 3% a month, that's more than enough to attract as many clients as you could possibly get. The best commodity trading advisors in the United States are doing 2% a month. So if you can do 3% a month, you're 50% better than the best. Best believe you're the baddest. How many people in the room have a $100,000 account? I don't know. We have people from all over the world. That might sound outrageously big. That might sound outrageously small. The thing is, I want you to think at what I meant it as a reasonable sum of money and a comparative investment. So, like, for example, a potential client might put in 100,000. I'm not saying $1 million, right? Now, a wealth manager down the street, they're like, unless you got $2 million, we're not even going to talk, right? So I'm not talking millions. I'm like, whether it's 10,000, 50,000, 25,000, 100,000, whatever. I want you to think of it as someone with some money needs to make a decision. Buy more mutual funds or do an alternative investment. And that would be you. And you, to attract that kind of money, you don't have to think the way you might be thinking now or the way you used to think. You don't have to think you need to make 20% a month. You need to make 3% a month. 5% a month, you're nearly doubling your account every 12 months. Doubling. So that might be a goal. Somewhere between 3 and 6%. Some months you're going to have mediocre results because the beta is mediocre. You can't make big money in a market that's not doing anything. The only way to do that is take additional risk, and you just ruined your career. You frightened away all the big game. You see what I mean? And so once you get all this lined up, guys, you're like, oh, 3% a month? That's easy. Yeah, especially if you lower your lot size and put on good trades in the direction of a trend. Stop gambling, stop betting, stop trading like it's a video game, and instead put it together like a career, like a business, and have very clear objectives. Now you're saying, oh, 3 to 6 months is 3 to 6% a month is easy? Then do it. That's where you want to get. You got to have the mental game first, guys. You need to know what you're trying to do and then go out and do it. Okay? But what is a lot of money? See, all that's relevant, relative. So you might say, Wayne, I don't know anyone that's even got $100,000. Okay, that's cool. But there's going to be some number. And of course, you don't need to make much money either in that scenario to have a career, right? So who cares? Money is worthless, right? If you need $2,000 to live a good life and I need $30,000 a month to live a good life, but we end up living good lives, then that's all that matters. And the value of my currency might be different than your currency. And at the end of the day, we probably are neighbors, right? We might live the exact same lives. The difference is the currency. What we're talking about, and I talked about this maybe even yesterday, talking about the purchasing power parity using the Big Mac index, right? The cost of a hamburger in Zurich and another one, the same Big Mac in Shanghai, and another one in Istanbul, and another one in New York City, and another one in Atlanta. All of a sudden you're looking at all these prices and you're like, but it's the same Big Mac, Coke, and fries. Why do we have all these different prices? And they reflect the standard of living. So whether we might live the same standard of living, and my cost of living might be half. Okay? I have friends in New York City that make fabulous money, and my movie theater is bigger than their entire apartment, and they make fabulous money. But they get something else in exchange. They can walk to work. They have fabulous restaurants and arts and community, and there's always stuff to do. Right? Cool. I don't get that in suburbia, right? So what I'm saying is the currency and the money really, even beyond currency, just the idea of money is only, it's only relative to what you trade it for. And of course, what we're all interested is a standard of living. So how many units of currency you make is irrelevant. Irrelevant, just totally irrelevant. It's irrelevant because it changes all the time. So so that's all. So whether you're like, how many people here have a $100,000 account? Well, I don't know. And to you, that might be a lot of money. To a lot of people here, that's not a lot of money. I would say it's a reasonable amount of money, right? And there are others that have $500 accounts. Cool. But it's all should be relative, right? If someone threw in a brand new trader threw in $100K into a Forex account, they probably have money. And if someone else throws in $1K, they have less money. But it's all the same to everybody, right? So anyways, don't get hung up on money. Money is an illusion. Okay, cool. So we'll do gold. And of course, here we are now. Okay. And I'm just waiting for market conditions to be favorable. Not there yet. Okay? Now, do you remember when I drew this? I drew all of this to show you how how to look for changes in market conditions. So I don't know if you continued the exercise. Okay? So a bull is going to look for a sign. So I'm not predicting this, but if you're a bull, this is what you'd be setting up. So you'd need some sort of evidence of that. That might be a price in which something like that would occur, or down here, okay, around 18. So you have to ask yourself, are you going to buy it at 19 or are you going to buy it at 18? See how? It's not that complicated, right? Right, Anthony. Yeah, focusing on what other people is, and it is truly irrelevant, isn't it? I agree with you, Anthony. Sev says people go work. It's hard to trade and worry about the end of the month. Yeah. Well, so all these things, like what I recommend to people that are just starting out is that you need to keep your job. Okay? And I know many people are like, they come to Forex to quit their job, but you need the income. You can't just jump in and say, I'm going to quit my job and Forex is my new job. That's not the process. Your job will keep you focused on Forex. So think of it. Where did the money come from? Let's say you put in $1,000 in your first trading account. Okay? Where did the money come from? From your job. So you need to do that, because what you don't want to do is turn your $1,000 into $2,000 and then spend the $1,000. Now you're back to $1,000. You're always going to be broke. Okay? Oops. So let's say you're doing your 5 to 6% a month. So at the end of a year, you have 2,000. At the end of another year, you have 4,000. At the end of another year, you have 8,000. At the end of another year, you have 16,000. And you're like, Wayne, it's going to take me a long time to make real money. Yeah, I know. You got it. Yeah, that's right. So keep your job and put in the time. Or start with more. Start with 2,000. How am I going to do that? Take 2 jobs. See, I'm sharing the get rich slow scheme. I'm sharing ideas with you guys where you can make 10 times more money, right? Someone with a job earning 200,000 and you're a Forex trader earning 200,000, you will retire 10 times richer. But it's going to take 20 years, maybe more. I'm preaching the get rich slow scheme. Okay? And getting rid of your job is after this period of you doing this for a while, then you're going to trade opium, right? Other people's money. And what does that do? The cash you're earning from your doing this now allows you to quit your job so you can focus on Forex for the next 10 years. And it keeps doubling and doubling and doubling and doubling. Of course, there's going to be volatility in the return. You're not always going to double it, and sometimes you do better or whatever. But I want you to grab onto the concept. There are only 2 things that matter to your ultimate return. How much you start with. Okay? And that's your assets under management, your AUM, and time. Well, how much you start with your returns, right? So if you're doing 5% a month, let's say, that's almost double, and time. So, right? So you don't want to increase this anymore. So you want to have as much time as possible and have as much assets under management as possible and have the consistent returns. Okay? That's what I want you to get to, guys. I want you to think that way. You will have way, way more than your wildest dreams that you have right now. If you have the get-rich-quick mind, you will have way more than what you can imagine now. But it will take you time. And it'll take consistency. And of course, people that are trying to get rich quick, they're flakes. They're flakes. They won't do it. They can't do it. They can't do it for 20 years. They'll just flake out. It's not fast enough. It's not easy enough. Forget it. Right? Manuel says, Wayne, correct me if I'm wrong. I think that when we breach 40 in crude oil, it will be plausible to short yens. Well, what you mean is buy yen pairs, yeah, and sell the dollar. So buy, yes. So you'd be selling yen, buying yen pairs, selling the dollar. Yeah, that would make sense. Okay. So anyways, I'm trying to get you to think big, guys, and behave big and not be so desperate for trades inside this market. Like, look, nothing happened this week on this. Okay. Now, the yen pairs did drop. Cool. So if you're doing day trading, you're selling. If you're doing monthly swings, you're identifying October buys. Yeah, right? You understand that? Day trading down, and you're setting up swing trades long. But we've been talking about that now for 5 weeks, right? Short-term short, but long-term long. So here's Biddy. Okay, so very similar to the other pairs. What you're looking at is, will we get above this? And it goes back to the old, we've had this now for 6 weeks, this price level, okay? It will be technically meaningful if we can get back above that price. So right now, you have the double bottom. Then the next thing would be the higher high, higher low, okay? And you'd be trading this. Will that happen? I don't know. But if it does, then what will you do? You can print out all these charts. Okay, you understand? You can print out all these charts as if-then statements. And let's say you plan 10 trades for next week. And you print them all out. And you're like, if Bitcoin holds above the double bottom, and if it makes a higher high, I will buy a higher low around this price. And you print that out and you say, if it does that, then I will do it. And you put it on your wall. And you do another one and another one and another one. Your wall is just 10 scenarios. Now you know exactly what you're going to do next week. Days before it happens, you're waiting. And you're like, that's it. That's all I'm going to do. And either you're right, and when you're right, you're probably going to make money. And if it doesn't set up, then you didn't do anything, so you didn't lose money. So now you get yourself in the scenarios that you thought about days in advance, and you might have a reason why you think Bitcoin's going to go higher. We call that a bias. So now you just sit around, and it either does that, and you'll probably make money. If it doesn't do that, you definitely won't lose money. Do you understand now? You're putting yourself into situations where the vast majority of the time you're likely to be right. Right? That's exactly right, too. She says the ability to read and analyze the markets is essential. And what I have found to be the moneymaker is not the size of the trading account. Exactly right. Low risk, small losers, letting winners run, being consistent. How do you be consistent in your trading? You have to have control. You have to know what you want to do before you've done it. That gives you control. Like what I just outlined here is control. So now you only trade things that you have planned in advance. And these are all these if-then statements. If it does this, then I will do that. And now you have to be patient and disciplined to wait for it and then carry it out. And if you only trade in situations that you have pre-planned, that's control, your consistency will go up. Whether that's day trading, swing trading, market open trading, scalping, whatever, you have to have all of this stuff. You cannot be random in a random market and expect consistent results. So now you have to have the control through trade planning to produce consistency in a market with virtually unlimited variables, what we call chaos. How can you expect consistent results in a chaotic market when you lack consistency? Mathematically, it's impossible. You must be mentally deranged to think you could walk into a Forex market and just throw down a bunch of trades and beat a market of professionals. Get in the ring with Mike Tyson. He will kick your butt every day of the week. Even if he's 50 years old and fat. But I think he's going to be in a fight, right? So I think he's probably pretty good, right? So now to take all of this, lower your lot size, take more smaller trades, have larger stops, have larger limits, trade with the bias, wait for market conditions to be favorable for that bias, then trade the bias through planning in advance and look at your trading history, your trading career from a longer point of view. And if you maybe take some of that advice, I think it'll make a big difference in your life. And that's why I'm here. I hope I make a positive difference. So thank you for being part of the Forex.Today YouTube community. Thank you for being a client of Trader's Way. My book, my training courses, the link to Trader's Way, my chart templates, and more. All the links are in the description below the video. Please leave a comment on the video. Please do the courtesy of giving a thumbs up. And if you're new to these webinars, we do this every single day, so please subscribe so you can get the heads up. So peace on earth. May the pips be with you. May our profits be above average. Thank you for being part of the community. Thank you for the loyalty that you show me. And thank you for the hard work that you put into this thing called Forex. It's worth the effort. You'll make it. Trust me, I've been there before. You got this.